Hello everyone, this is Dan Gramza and welcome to Gramza Market Studies for Tuesday, November 8th, U.S. Presidential Election Day, and also greetings from Warsaw, Poland. A few things to think about. We've been talking about in the advanced video I've mentioned there, and I don't think you and I have had a chance to talk about it, but Stratagas Research Partners have come up with some statistics I think you might find interesting. If the U.S. stock market is up 3 months prior to the election, the incumbent party wins 86% of the time since 1928, and it's correctly predicted the presidential elections since 1984. Also, if the S&P is up 5 days before the election, 20 out of 22 presidential elections votes have been for the incumbent party. So let's take a look at what's going on in these indices. The S&P, you would not have been long from this green line. The concept in this case, the market opened higher, and that opening is at 2106. The magnitude change between the bearish and bullish is 2,200 contracts per contract. And back here in the NASDAQ market, the magnitude change per contract there is $2,900 a contract. In the Dow, the magnitude change between that bearish level and that opening is $2,000 a contract. And over here in the mid caps, that magnitude change here is $1,600 per contract. $1,600 per contract. So what do we look for today? I'm looking for an unchanged higher. Also, as we talked about in the advanced video, I'm looking for some strength in the first 2 hours of the election day, but it has nothing to do with who would win the election and behavior after those first 2 hours. It's typically an up move. But let's move on and let's take a look at what's going on in those currencies and see what's happening there. In the euro, it traded below its bearish level. The magnitude change here between the bullish and bearish in that market is $1,937.50 a contract. I do look for further weakness in the euro. In the Swissy, the magnitude change between that bearish and bullish level there is $1,750 a contract. Our friend Mr. Yen, the difference between the bearish and bullish levels here from that bearish level to this bullish level is $675 a contract. In the British pound, the magnitude change here between the bearish and bullish is $150 a contract. And over here in our friend Canadian dollar, we just need to see this market firm up a bit. It looks like it wants to. I have my doubts about continuation to the upside in that market. But in the notes, the market does rally. We saw on Friday, but on Monday it did back off. I look for further weakness in the 10-year Treasury notes in today's action. Gold doesn't have a reason to move up right now. It's kind of been taken away. Depending on the outcome, I'm looking for further weakness in gold market. So it's kind of an interesting setup there. Crude oil also, I'm looking for a little bit of follow through to the upside and then a sideways market. Over here in natural gas, we did trade above its bullish level. The magnitude change between the bullish and bearish level here is $650 a contract. And let's move on over to the grains. Soybeans traded above its bullish level. The magnitude change here between the bearish and bullish is $500 a contract, and I do look for follow through to the upside. Well, that concludes today's market studies. Thank you for being with me. Look forward to being with you again, and as always, take care.